Good morning and welcome to the XM.com weekly market update. With me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Welcome back.
Yeah, it's lovely to be here.
Australia, GDP numbers came out late last week. The quarterly number 0.1%, and as the chart shows us, it's a slow grind lower.
Yeah, I tell you what, over the next couple of quarters, it'll be interesting to see if it can stay in positive territory, but I would say from that chart, there's very little chance.
Yeah, and there's plenty of weakness in the local economy as well with the higher interest rates.
Yep. High rents, high food costs, you name it, everything's grinding lower and, redundancies.
Yeah, that's right. So it's making it pretty difficult. So the Aussie dollar is holding up sort of reasonably well, actually. So, yeah. But
freak of nature.
Yeah, and the Reserve Bank's still talking. Their focus is obviously on inflation, which is still hanging around that 3.5%. So I just can't see how they could possibly put interest rates up to tame inflation in this current environment.
Exactly. Well, first off, the Aussie dollar, and I agree with you, it's 66.04 as we speak right now, Tuesday morning, and there's still a 20 to 30% probability you're going to see a rate rise. So there's 70% saying no, but we've just got to see how this all materialises from an inflation standpoint and the overall economy leading into probably that August period. Last week was a big week. We had Canada down and Eurozone.
Yep.
As far as interest rate policy pullback and what's going to happen with the Fed, of course. It's a lock up media-wise over the next couple of days.
That's right. Europe, plenty of activity. So before we move on to France, the GDP number came out last week, was sort of up 0.3, which was an okay number, considering where it's been the last few quarters. But all the focus is on France and Germany at the moment, though.
Yep, Macron's got it. He's battle scarred, 32% far right support. So, and again, very, very solid support for it as well in Germany. So it's sweeping changes across Eurozone. And as Jimmy Rogers said, is the Euro going to last? He said that many years ago. Is the Eurozone going to still last, a couple of decades? And we're not quite there yet.
No. But the Euro obviously came under pressure after those results.
Yeah, well, it's at 107, the US dollar index back above 105, and it's correlated 61% weighting to Euro. So I would think that with those cuts, it's got to test, probably 107 sometime this week or certainly by end of month, because that downdraft, Andrew, if you go to lower rates, the US dollar, there's no talk of that yet. And let's see what the rhetoric is this week from Fed Chair Powell. So they're really with their back against the ropes because there's no way out.
No.
You're grinding closer to that election, US election, that is.
It's tough. And you sort of think in the Eurozone as well, with a rate cut coming through already, then the next one, whenever that meeting will be, is obviously going to be down again.
Oh, yes.
And the economies there are quite weak anyway.
Yeah, certainly. And Canada, very much so.
Yeah. Over to the US, as we said, plenty of activity this week. The CPI numbers come out. The expectation is to be pretty similar to last month.
That's right.
It's coming down, but it's just proving to be quite sticky where it is, and they just can't seem to get it. It's like that. It's like the last mile, which is probably the most difficult part of the journey.
Oh, it's Iron Man. You've got to, exactly right. You still got that, you're at 25 miles into a 26-mile marathon. You've already had the swim and the cycle, and you're in Hawaii and the heat's pretty hot. I think that the issue is going to be over the summer period and where oil prices trend. We had a big bounce overnight. So if oil prices stay under 80, it's a godsend for inflation. Yeah.
And that's and these lower oil prices over the last couple of months has obviously helped those inflation figures anyway. So they'll be hoping they stay where they are for a protracted period. So, and finally, the US non-farm payrolls. Once again, the labour market has proved to be very resilient.
272,000. No analyst out there from Bloomberg tipped anywhere near it. Everyone was 100,000 shy of this. So that's where it's so hard to pick. And it's you can't argue with the numbers.
No, that's right. So. But anyway, and we're moving into obviously the summer months over there as well. So likewise in Europe. So there might be some better times ahead. But as we know, a lot of talk will now focus on the election.
Absolutely.
Getting a lot closer now.
Yeah, for sure. Is Biden going to run against it, against Trump? Is he dead man walking? Are they going to look at, a change of batter? Everyone's talking about it. So is he electable?
Yeah, you would sort of think, if they want to do that, they'd want to do it pretty quickly.
Well, absolutely. You couldn't leave it too much longer. You'd have to be by July, I would say.
Yeah, you would think so. But anyway...
Because you've got the debates in July.
That's right. Yeah, with both of them.
Yes.
cure for insomnia.
It's going to be interesting. That's all I'll say. I don't think we've seen any fun yet. I think it's going to be fascinating.
No, it has been very quiet, hasn't it? Like surprisingly quiet.
Surprisingly.
So I'm sure it'll all ramp up fairly soon. But anyway, we'll keep an eye on the big numbers coming out of the US later this week and chat again next week.
Look forward to it, Andrew.
Thanks, Pete.
Thank you.
And that's the xm.com weekly market update.